Okay, good afternoon, everybody. Welcome to Paul's Monday Market Update, 155 for the 23rd of September. I hope you're all well. I hope you've had a good weekend and are ready for a good week, despite this rather gloomy weather we're having here today. As always, before I begin, for those of you joining us for the live session, if you could just confirm that you can see the slide and that you can hear my voice, that'd be great. Just make sure the technology is working before we crack on. That's excellent. Thank you. Much appreciated. Okay. As always, great to have you here. You're very welcome. If you're joining us for the first time, the Monday Market Update is just that. It is me flying through as much as I can squeeze in over the next 30 minutes, looking at strength and weakness within FX markets, looking at some charts that are of interest that you may wish to add to your watch list, and then having a look at the live markets. It is a Monday Market Update, okay? It is. It's not a signal service. It's not a trade recommendation. It's just what I'm looking at, which might be of use to yourselves in your own trading analysis. As always, you are very welcome here. Just remember that you're always responsible for your own trading decisions. If you're around and available, and if you want to hear some more educational elements, then every Monday, 2:00, I deliver a webinar for ActivTrades called Monday Market Matters. You can either register on the website or there's a QR code there. 2:00 every London. This week, it's going to be about how traders go about using stop losses. So that is the main educational element for that. And as I said, that's every Monday, 2:00. If you want to join, you're very welcome. Right, let's dig into our element here. Now, I appreciate if you're new to trading or new to joining us, this might maybe look a little bit confusing or overwhelming, but it's not really. What it is this is the work I do every weekend on establishing where's the strength and where's the weakness, primarily within FX markets, but also in indices and commodities. And the reason being that it then allows me to determine and allocate my time, energy, and resources accordingly. I'm always looking, especially within FX markets, in line with VTP stage 2, I'm looking to buy strength and sell weakness. So what's this telling us? How do we utilize it? Well, here we are into week 39 of the year already for the 23rd of September. Where's the strength? Where's the weakness? Is there any major changes? Well, yep, there has been some major changes, namely that sterling has bumped itself back up to the top of the pile. Now, to be fair, sterling has been relatively strong, okay, for most of the last quarter, most of the last summer. But as I've often said, its strength has been more to do with the weakness in others, more so than significant strength in sterling. But ultimately, you trade what you see, not what you think. Okay, the fact that I think it's like a false strength, okay, is of no real relevance. It is strong, okay. The price action is supporting that, and so you trade what you see, not what you think. But sterling has basically bumped itself up there, and that's pretty much been at the sort of the cost or the price of Swiss franc, which you can see has rolled its way down to fifth position. That's not a massive surprise. I've been saying for the last few weeks that the Swiss National Bank, okay, would not have been happy to have seen sort of the Swiss franc strengthening as much as it had done over the last couple of months, and they will be delighted that basically the sort of the wind has been taken out of the sails of Swiss franc strength there at the moment. Japanese yen does remain strong, okay. In spite of them only holding interest rates at 0.25% on Friday, okay, no rates rises, which nobody really was expecting. But as I think I said last week, had they done that, it would have been put the cat amongst the pigeons. Yen remains strong, but the weekly price action, which we'll look at in the moment, is giving us an indication that some of that strength has kind of coming to an end. But it's easier to sort of describe that and look at that on the charts itself. I put a little thing out at the weekend for members of the VTP and stuff, just raising their awareness of that. But yen remains strong, but it's sort of kind of it's coming to an end there. What we are seeing, though, is dollar remains okay. Dollar remains bottom of the pile, and not a massive surprise after the 0.5% interest rate cut there last Wednesday. I open up and I'm honest enough. I got that wrong. I thought it'd be about 0.25%. I didn't think they'd go sort of both barrels to start the journey, but they have and stuff, and that's where they've gone, that's what they've done, etc. And so be it and stuff. So, but of course that had an impact on dollar weakness. And invariably, Thursday itself was just for intraday traders was just a fabulous, just a fabulous sort of example. Look at the price action of just basically selling dollar against pretty much everything else, and all the other majors there on Thursday morning after the news review. Canadian dollar still remains weak. We've got basically the kind of the the other COM in the middle of the patch. Euro is kind of weakening as well a bit, and that's continued this morning. When I just put in looking at the sort of the last 24 hours, what's been going on there. Euro weakened further after we had PMI numbers this morning, okay, and they were pretty poor, especially French and Germany, which we'll maybe touch on a little bit more later on when we look at some of the charts. UK's PMI was weaker than expected, but it is still above 50. PMIs are for people new to trading, new to analysis. PMI is, it's a simple tool to start with. If the numbers are above 50, the economy is expanding. If the numbers are below 50, then the economy is contracting. So, yes, it's a lagging indicator, but it's a one that is very quick for kind of, let's say, private traders to get a grasp on the trajectory and also the sort of state of those economies. And as I said, the French and German numbers were poor. There's a shocker, no shock there really, and that has had an impact on euro weakening, as opposed to some of the others which we can see have strengthened for this morning's session against the US dollar. What is of interest to me is when I start to look at the STAM environments for the currencies, is that there's lots of them growing out. Whereas we'd thinned out, okay, over the last few weeks and stuff, it's starting to build up there, okay, those particular STAM environments. When I look at the indices, what we saw was that that interest rate cut is initially seen as positive for stocks, and what we saw was Dow, S&P, etc., finishing weeks on highs, etc., which we'll look at in a moment. But my model is also still showing me pretty much all of those, the kind of certainly the American ones being strategic buys. DAX remains a strategic buy, but as I said, I find that fascinating compared to what's going on in the stocks, and we'll look at that in a moment. Nikkei's back being strategic buy, as is the ASX. Oil remains a strategic sell. No shocker there. Gold pushing to highs remains a strategic buy, and silver is remaining above 30 and remain a strategic buy there. And Bitcoin is as well. So everybody's looking at this saying everybody's happy. Everybody's everybody's excited. Everybody's happy. Everybody's sort of using that as a chance to remove the sort of opportunity for a recession. Everybody's thinking there's going to be a soft landing in play. So let's just see how that plays out, ladies and gentlemen. Personally, I would not make any such claims until after the US election. So I think that US election is going to have a huge impact. Okay, whoever wins that will have a huge impact. And so in terms of like big views like that, I would probably be holding my own counsel until we see the results of that US election. Okay, so let's have a little look at some charts of interest. These are just charts that that can be you can take on board. They might be interesting. You might want to add them to your watch list. It might be great teaching examples. All right. So first one, weekly chart, Rolls-Royce. Rolls-Royce has been quite an interesting stock. Okay, was languishing. All right, was in a real kind of weak position, and variably not going in the right direction. And you can see how that has reversed, okay, in pretty much the last year. It's been a pretty good year for Rolls-Royce, okay. So having seen us languishing down here about 60 pence and stuff, okay, working our way, you can see that basically that trend has changed, and this has been a really lovely trend. And as I say to new traders all the time, good trends leap off the chart at you. You shouldn't have to force it. If you're forcing it, it ain't there. And this is a great example of basically just a beautiful trend on the weekly chart. Okay, for a good while now, for a good couple of years, and we're just every time it's coming back here. Let's just bring up the old. Going to we're seeing the 20-period moving average has acted as kind of nice support there, and here we are, kind of up above £5, up above above that, having had another set of good numbers and good work, etc. So that is just a great example of a trend going in the right direction. And the question would be, well, you don't want to fight it, okay? You don't want to fight that whatsoever. Looking at that sort of starts of trends, okay, or how changes, or let's say corporate policy. And this is PayPal on the weekly chart. Why was I interested in this? Well, what we saw was kind of last year we saw it hitting a low of kind of $50, and at the end of last week we had a good week. Okay, we bumped to do focusing on the rebranding of PayPal. That's the kind of world we live in, that people get excited about marketing, rebranding, all right, or using that as a kind of nice distraction away from the business. Listen, if you'd have bought PayPal at $50, to see it now trading at $77 in the pre-market, you'd be very pleased with yourself. That's a fabulous return. All right, over the last year, you'd be absolutely, you'd be cock a hoop. The problem is that actually, that is not the full story, because invariably, actually, what we did see is that we crashed from like $300, okay, over in a short space of time, shorting our way down. All right, and so now I'd be looking at this as if you follow like Stan, I never pronounce it, Stan Weinstein, his idea would be looking at this as that was a stage 4. We've been into a stage 1, and now we're looking to break out into a stage 2, I'd suggest. And so this might be, as I say, something you want to add to your watch list going forward. In terms of companies announcing this week, okay, Thursday after markets close, we've got Costco, but a little bit like the Rolls-Royce. This has been a great trend. I think we looked at it a few weeks ago. You can see for itself is that it's actually been in a great trend for a good few years now. Okay, Costco, and I'm the first to admit, I always keep an eye on the share prices of companies that I use. I've got a Costco about 10 minutes up the road, okay, and I use it, and they regularly take money out of my account and stuff, like pretty much everyone else, because you go there and you buy stuff you don't really need. But anyway, as a business model, it works, and as you can see for yourself, it has continued in that overall direction that you can see. That's it's got numbers out on, as I said, Thursday after work, but I think we were looking at here sort of kind of earlier in the year where it was looking around. Let's get the old drawing tool. Where we were looking around, okay, having had this bearish key reversal, we were looking, would the 20 hold? If the 20 didn't hold, well, then, we could have basically been coming down to sort of 600, 640 zone, but it held. Another example of, okay, that 20 period moving average holding and then breaking out of it. And then, we've flown up, came back, retested the 20 and the 800. And here we are again and stuff. And now you've got to look at, is that a case of, could this power its way to 1,000? That's what you'd be looking at. Big round number. Will that act as a magnet? But certainly that is in a strong uptrend. You would not be fighting that. Okay, everyone will be interested indeed on the numbers on Thursday, but until that changes, you wouldn't be looking to fight that as a trend. Talking of others that have been in a good trend, Oracle. The kind of this is kind of interesting to me. All right, so I was a child of the dot-com boom. All right, where Oracle were just starting their way out, just making their way. Okay, and during the first dot-com boom, making their ways off, basically databases or Oracle servers, etc. And kind of had a real boom, went a bit quiet for a while, and then Larry Ellison, okay, who still owns it. I think he's about 80 now. He's clearly had some work done. These guys have been, I would suggest, whereas the AI hype has focused on those companies like Nvidia, etc. Oracle has just quietly in the background just nudged its way away, and now it's starting to as those investors look for ways and opportunities away from Nvidia and the big names. Oracle seems to have done well out of that. If I look at that here from where the down at $40, where we had the kind of the pandemic crash. Okay, from at $40, we're now sort of have traded up as close as high as as above $170, and certainly from this October low that we had. Okay, but last year it's been going great guns, and that has accelerated. Okay, and Ellison's been coming out. Maybe it's because of the business, maybe it's because it's his 80th birthday, but he's been commenting about AI and about how Oracle are positioned, and as you can see, that has had an impact. Now, for complete new traders investors, my own view has always been is when a market's gone vertical like that, you've kind of missed the boat. You don't want to be chasing it. You don't want to be chasing it. If you're in it, I'd be tightening up my stops. If you're sat on the sidelines, stay in the sidelines, because once the price goes parabolic, well, the likelihood is that actually there'll be some profit taking, and it might sort of just drift its way down there. But that is quite some price action movement, okay. And as I said, you might just want to watch to see how that plays out over the next couple of weeks, okay, over the next couple of sessions, whether it can hold that or whether there's some profit taking back down to that 145 area. And finally, before we go to the live markets, this is UniCredit. Okay, UniCredit in the market because they have been creating and building a position in Commerzbank, one of Germany's big banks. So I wouldn't claim to be an expert on UniCredit in any way, shape, or form. You know, they're a Milan-based Italian bank. Okay, but as you can see, once again, they have actually had the last couple of years and stuff have actually been pretty good for UniCredit, okay, in terms of that share price from €10 to tickling the soft underbelly of €40, okay, and undoubtedly with that great share price move has probably found its way into the boardroom, and the guys starting to sort of throw their weight about, and so they have been establishing a position in Commerzbank using derivatives now. I think it's up to about 21%. They were saying, and invariably the Germans aren't very happy about this. Germans aren't happy about it at all. They've come out saying that they're basically not going to be selling any more shares because they don't want to take over. If you're a cynical old duffer like myself, you might sort of just suggest that the Italians are just enjoying it just a bit too much because after the crash having been castigated by the Germans about them being along with the Portuguese and the Irish and the Greeks, the pigs, about them being absolute terrible economic basket cases. Those kind of roles have reversed. Here we are 15 years on and the German economies are struggling heavily, and the Italian and the Spanish ones and the Irish ones have not done too badly in consideration and stuff. And so as I'm a child of the 80s, as I learned in Star Trek II, The Wrath of Khan, revenge is a dish best served cold, and I suspect that there's an element of this going on in terms of the Italians wanting to teach the Germans a bit of a lesson. But as I said, that might just be me being a cynical old duffer. Ultimately, we're all interested in is that is a fabulous trend. Once again, that weekly chart holding the 20-period moving average, you can see the way that's done that, okay? And now we're getting here, and I'm going to be seeing, how this plays out, okay? You start to see there's a bit of volatility coming in there at the end. Is that going to continue, all right? Or is that going to have if the Germans put up a good defense, is that going to basically cause a rollover in the UniCredit share price, okay? So, as I said, want to add to your watch list to see how that plays out, and the same way you might want to look at Commerzbank. Okay, so there you go. Just some charts of interest you can take away, you can learn from, you can add to your watch list. Let's switch across to the live charts now and have a look at what's going on in the markets. So just bear with me for a moment and we'll switch across. So just bear with me a second. Right, where should we start? Okay, all right. So I hope you can still hear me. I'm hoping you can see the charts. This is just one of my indices profiles. I've got Dow, NASDAQ, S&P, Russell, FTSE, Nikkei, DAX, and oil there. Okay, so they're all there. Just to look and see how they played out. Let's just clear that down and have a little look now. So, the kind of interesting thing is, as I said, after the interest rate cuts, okay, by the FOMC, by the Fed, what we saw was, on the weekly chart, that was pushed to highs. Okay, that shouldn't really massively shock. That was the kind of the initial reaction of what I'm going to be looking to see is that can that continue? Can that follow through? What are we? 6 weeks, okay, till November 5th to the American election. I'm going to be interested to see, do we power on? All right, is this a pump before the dump? Or do we just go sideways because of basically people's sort of indecision before the US election? So, yeah, we've pumped. Can it continue that? That, if I'm honest, I don't really know. But that remains in an uptrend. Okay, so I won't fight it until I get good signals the opposite way. S&P 500 has done the same. Okay, you can see they closed at highs. Okay, highs for the year, highs of all time, etc. Pushing its way through, and the same story goes. Once again, weekly 20-period moving average has acted as fantastic support, And there we go. We just, we'll just watch and see how that particularly plays out. Remember, this week, we have got news. We've got lots of Fed speakers this week who are coming out. Okay, they'll all be giving their own view on what happened last week. So markets will be interested in that. And we also have end of month and end of quarter flows as well. So it's going to be an interesting week. There's plenty of news coming out. Okay, so as always, make sure that you're on top of your news flow and keep your powder dry for the good chances. So, as a Dow and S&P 500 are pushed their way through, that has not so much happened for Nasdaq. Okay, let's just update that line there. Okay, what we're looking at here is, yes, it's broken that kind of counter trend line. You might say, Paul, that's a bit of a symmetrical triangle that's built there on the weekly chart, and so we would expect that as a continuation pattern to go to the sort of the highs. That would be, I think that would be most people's natural target if Nasdaq gets dragged higher by Dow and S&P. Okay, that's what we'll be looking at there. Russell is Russell's a bit of a law to itself, isn't it? Has been over the last couple of months there. That's just that's all over the place, isn't it? There are easier ways to trade. Okay, in terms of the other indices, what they're offering you. Interestingly, as I said, we've just been talking about Europe in terms of not only the economy but also German stocks. Hasn't stopped the DAX, powering its way up here. Okay, it's still at these highs. Okay, still above 19,000 on my charts. All right, yep, the price action might be a bit dubious in terms of I'd look at that as a bearish engulfing candle, bearish key reversal, second leg of a double top there with a pin bar there. Okay, you have to say is that now starting to reach its edges, reach its limits. Okay, once again, it just seems to be following the kind of the bullishness of certain US indices. Okay, plus the certainly isn't doing that off the back of good German news, and so it's a case of just watching that and seeing how that plays out compared to those American indices. A bit closer to home, FTSE, we've had the Chancellor speaking at midday and stuff, and I didn't bother to listen to it because, well, frankly, it'll either put me to sleep or get me raging at the TV, and there's no need for that, really, is there? No, either way. So, but looking just at the charts here, I look at that as a bit of a big, wide double top there on the FTSE. That this doesn't surprise me. I think people, in the same way, people aren't going to make decisions about the US indices until the US election. I don't think people are going to make big decisions about the UK until they hear what Rachel Reeves comes out on the 30th of October as her budget. Most of the news out beforehand has been scary, and the question is, will they be worse than that? Or are they fear mongering so that actually the budget itself doesn't appear or doesn't feel as bad, even though it probably will be. Either way, despite we've seen Dow and S&P pushed to new highs, you ain't getting that off the FTSE, all right? And as I said, I think this will just go sideways for the next month, until we get that election. Until we get that budget by Rachel Reeves. That's what I think we'll look at there. So it doesn't really interest me. If we look at some of the commodities, gold, boom, look at that. The interesting thing is that they're cutting interest rates and gold is pushing to all-time highs. You can come to your own conclusion about what that is telling you, what the market's telling you about what it, about what it really thinks. Okay, I appreciate there's lots of external variables go into that price of gold, but you can see for yourself. Once again, that's a great uptrend. Why would you fight it? There's no point fighting trends like that. Okay, I thought we were going sideways here on the daily chart, but once again, 20-period moving average acted as great support. Does in great trends, and then away it's gone there. Okay, and I don't see any reason for that to end at the moment. Looking at its kind of cheaper sister, silver. As I said, I was surprised, that we bounced off 28 so strongly above 30, and we're held above it last week. We came down, tipped it, but we closed above it, and I'd say, we are still holding. We're still holding above 30, and if it's going to build a base there and follow gold, that would be quite some move there. Okay, quite some move there, but it's I'd be still bullish on silver with that. All right, let's switch across then. So let's have a look. What we'll do is, time. I don't want to overrun too much. We'll look at dollar, we'll look at yen, and we always finish on sterling. Okay, so let's have a little bit of a look. There was a little bit of couple of little sort of intraday trades on sterling and dollar for me this morning. Okay, so I was up early. So I normally don't really go full bore on Monday mornings, etc. But I was up and awake earlier than normally. So I was in the in it to win it, so to speak. All right, let me just put these onto weekly charts. We'll look at the dollar index as always. Okay, looking at FX markets. I want to look at the big boy, so find out what the score is there. Now let's bring this up. Bosh. Here we go. So weekly chart, dollar index. We had a great downtrend for a couple of months, and then here we are, 100. Okay, finding support at 100 and the weekly 200. Interestingly, having bounced off it a bit and then plummeted down to it, that shouldn't be a shock. I look at that as a bit of a high wave candle there, personally, for the last week. Okay, yep, it's a bearish bias, I'd be suggesting, but that's not a massive shock in terms of what we underwent from the FOMC meeting. When I start to look at the daily chart, I started to get interested as well. I talked about it a couple of weeks ago, how I was curious to see, where we going to get like a double bottom there. Okay, double bottom with a nice second leg presented by a bullish pin bar, but we had to break that. We had to break that fractal for it to convince me, and as you can see, we didn't. I mean, we came up with Bosch down, and once again, you might look at this now. Excuse my drawings. Okay, we might look at this. Some people might look at that as that we are building a base there. We're building. There's a triple bottom there at 100, big round number. But what would I need to see? Well, I'd need to see confirmation for that. First confirmation is actually getting above the 20 and holding above it. Then once again, this neckline here. If you look at that really for that last month, you could say we've just been in a consolidation box. It needs to get above there, above the daily 50 for me to convince me that we were getting any kind of dollar strength there. Okay, and not unsurprisingly, okay, on the flip side, if we break beneath 100 and we start closing beneath it on daily and then weekly, well, that's probably an indication of continued dollar weakness, which is what we might see if we start to see more and more. And I think they're kind of reckoning for another 0.5% of interest rate cuts. We will see what happens. As I said, that the election could change that, but dollars there. It is finding a base so far. We will see what happens with that, whether that basically continues or whether that collapses. But then you're really looking at, well, what impact is that having on the others? So euro against dollar. We had a bounce. We had a euro dollar weekly inverse of the dollar index. We had that nice bounce off the 200 and a pump through it. Okay, but of course today we've dropped with that kind of news from the French and German PMIs. This is a question really at this moment between euro and dollar. Mirror on the wall. Who's the shittest of us all? All right, and that's what I think we're going to have a battle with for the rest of 2024. Okay, between them there, and hence why that really is a bit of a block there for most of the last month in terms of the way that euro dollar's played out. What we'll look at cable in a moment. Interestingly, even though Swiss franc has been strong, we can see for the last few weeks we have been building a base there. And last week was actually dollar Swiss was a bullish pin bar at this kind of level of support which we've seen there. So that in itself is giving us an indication that even though dollar was weak, it still managed to print a bullish price action against the Swiss franc, and that's probably an indication of how quickly Swiss franc has been weakening. What we've kind of been interested in seeing is Aussie dollar weekly chart has been swinging all over the place, but you can see for yourself we had a bullish Aussie week. This week so far continued. Remember, we're pumping before RBA overnight. Right, we'll see whether that actually continues. Okay, to watch that. Remember, that's coming out overnight tomorrow morning. Although we're not expecting any changes from RBA, but as always, people will be getting ready for it. Kiwi dollar, that has now, I would look at that as being a very nice bullish morning star formation. Okay, we've pretty much all of these moves off the dollar over the last couple of weeks worked particularly nicely. Dollar against Canadian dollar, okay, has bounced at a 50 MAB. That's a really nice bearish pin bar off the 50 period moving average. I'll be watching to see if that plays its way through there. Okay, if we start to get a bit of Canadian strength against dollar weakness. So, we're waiting to see what dollar decides to do. We might get that. But in the meantime, let's have a look at yen. So this is my yen profile. They're all on the weekly charts. As I said, I did a little thing on this at the weekend for the FTP traders. Listen, we've looked at it. It's been great. It's been great trends, hasn't it? Great trends, okay, of yen strength, okay. You don't, bang. All right, you can see that there on the weekly chart, okay. That's what we had. But look at what we ended up printing last week, okay. So dollar against yen, even with dollar weakness, we printed, that is a, it's a bullish engulfing candle, okay. It's a really bullish candle there. Even pound against yen, even though it wasn't an engulfing candle or a key reversal, it's still a very bullish candle, and you might say there's a bit of a morning star there. Against the Swiss, against the yen, in a week when the Swiss franc was been weakening, it still managed to strengthen and print a bullish engulfing candle against the Japanese yen. Euro against the yen, okay, printed a bullish key reversal. Aussie against yen printed a bullish candle, which is part of a morning star. We saw Kiwi against yen, okay, print a bullish candle, and we also even CAD against yen printed like a bullish engulfing candle. So, you hear me often say that, when you see that across the weekly chart, across all the kind of correlated currencies, you want to sit up and take notice. That is telling us something there, okay? All these people who've been, long yen, they're taking profit there, all right? They're taking profit, okay? And, and we will see whether that follows through, whether this was just a little bit of a profit-taking retrace, okay? Or whether it's the start of some more yen weakness. I would be just watching that. But as I said, when you see that, you want to sit up and take notice of what's going on there. Okay, right. Let's finish off with UK sterling. Okay, that's what we always look to finish with. Okay, so cable. Okay, let's bring up cable here. And not massively dissimilar to what we've seen on the other US dollar charts we just looked at. Namely, we had pulled back. We said it a couple of weeks ago, it drift down to 130, and it bounced off it beautifully with the pin bar and just rallied its way up through. And that is just a reflection of that sterling strength, dollar weakness. Remember, this is what I'm looking to do. I'm looking to trade strength v weakness in the FX markets. That's really all I'm looking to do. Okay, that's what I'm looking to. I'm not looking to fight them up market where it's very clear where the strength and weakness is. That's what I want to that's what I want to run with there, okay. And that's what that's what we're seeing on the daily chart, okay. That's how that's playing out. We've just looked at pound against yen. It's clearly it is reversed. It's back up above the weekly 50 there. That's what we're looking at. Pound against Swiss franc, as I said, I actually was looking here a couple of weeks ago. I thought the 50 would act as resistance, and actually I thought we might be drifting our way back down to this kind of about 110 area. But you can see that Swiss franc weakening has been accelerated with sterling strength, and you can see last week was a real bang, strong sterling move. We was looking at this like a broadening formation, okay, like a megaphone. Holding above the daily 20, and then bang, it's above the 50 now there, okay, and that's sort of sterling strength, Swiss franc weakness going on there. The Comdols against the Aussie and Kiwi, I'm not massively fussed, but against Canadian dollar, we had been talking about this over the last few weeks. We talked about how we had double top, but we were watching to see how it played out, because we were actually getting one inside bar, two inside bars, followed by a kind of a bullish, I would call that a bullish momentum pin bar, okay? It's supporting the trend. And then last week, as you can see for yourself, we just rallied strongly up there to 180 and above, okay? And now I'm going to see is 180 gonna flip from resistance to support, okay? Are we going to see continued sterling strength and Canadian dollar weakness? That's what we're looking at there. And then kind of finally, that's pound against Swiss franc, euro against sterling. We talked about it a lot we talked about it a lot in the last few weeks, namely price had basically the weekly 50 acting as dynamic resistance and 84 acting as support. And then invariably what we see in that is, is basically those moves there, okay, so sterling strength, okay, breaking that 84 level. I'd be interested to see if we come back and test it, or whether we're now into that new area. This is the monthly chart where we're coming back down to sort of towards 83. That would be quite some move there. Okay, there you go, ladies and gentlemen. Overrun by a couple of minutes there. Apologise, but as I said, I'm always flying through, trying to get in as much as I possibly can to share with you. I hope you find that useful. I hope it gives you just a little bit of help, a little bit of insight. As I said, if you want to learn a bit more about stop losses, I'm doing a session at 2:00 for ActivTrades. For those of you on the VTP, there'll be the call tonight and the call tomorrow. For the rest of you, it's going to be an interesting week. Lots of news, end of month, end of quarter flow. flows, reaction to the interest rate decisions of last week. So make sure that you're on top of the news flow, that you are managing risk, and that you all have a fabulous trading week. Ladies and gentlemen, take care and have a great week. Thanks.